Okay, good afternoon, everyone. Thank you all so much for being here today on our fall member town hall. My name is Ty Koppelson. I'm going to be kind of hosting today's town hall, and we're really happy to have so many people here. We're really excited to talk about our initiatives and talk about things here at the end of the year, or towards the end of the year anyway. But I want to go over just a quick Zoom housekeeping before we begin our presentation. So we're in webinar mode today, which basically means that all of our participants are automatically muted. Your cameras are automatically off, so you can go ahead and enjoy your lunch. You don't have to worry about making any sound or anything like that. This reduces the background noise, as I mentioned. And then the other thing that might not be as familiar is that in webinar mode, the chat is actually disabled because we use the Q&A feature to answer questions and to take incoming questions and comments. So we definitely welcome and we always want those questions and comments, but please locate the Q&A feature on Zoom to make sure that your questions are coming through. This helps us be more organized on our end and helps make sure that we have access to everybody's questions, everybody's comments. So if you don't quite know where the Q&A is, if it's not automatically on your Zoom bar there, sometimes it's minimized and you need to find the three dots that say more on the Zoom taskbar. If you click on that, you should see the section that says Q&A, and you can go ahead and use that to ask any questions, make any comments on there. We have a couple different team members in the background that are going to be kind of addressing that as we go. And then towards the end, we might be answering some of those live, depending on the nature of the question, that kind of thing. So that is that. And then this is automatically being recorded and is going to be put on our YouTube, just like all of our other town halls and webinars. So if you're worried you missed something or you wanted to go back and reference something again, or like rewatch one of the answers or questions or anything like that, you can definitely do that. It'll be on the YouTube channel, which is youtube.com/@HarvardFCU. So don't worry, you can always follow back up on that. So thank you all so much for your patience this morning, or afternoon, I suppose, as we get things started. And without further ado, I would like to introduce our CEO, Craig Leonard. Craig, thank you so much for being here with us today.
Thanks, Ty. I really appreciate it.
Yeah, no problem. All right, so we gathered a number of questions before today's webinar that were asked by registrants here for today's town hall, and we're going to get started with those. But before we do, why don't we ask you a little bit about Harvard FCU's financials?
Yeah, fantastic. Again, thanks everyone for participating in this is I think our third one this year, right, Ty? Right?
I believe so, yeah.
Doing these on a quarterly basis for a number of years now. So financially, we're having a better year from an earnings standpoint than we first projected. So we're slightly ahead of target, which is nice. When we look at our balance sheet, lending is down this year. Interest rates still being, a little higher in the marketplace now for the last couple of years has really impacted the mortgage market. So we continue to see, slower growth rates within the mortgage portfolio in particular. Student lending this year has also been down a little bit. Some of that has to do with some of the chaotic nature of what's transpired this year in the administration has really impacted kind of international applicants more than anything else, which has impacted our kind of loan originations. We are seeing, fairly good deposit growth, around 4.5%. Doesn't seem like that's large, but when you look at the industry, that's actually above normal, which is nice to have. The other important thing that I'll note is that our membership growth rate is about twice the national average right now. So we're growing a little bit of over 4% of those new members coming into the institution. I think they are seeing what, Ty, you and I have always seen as this great value within our organization. So we're probably going to be close to that 59,000 membership number by end of the year, really targeting, we're hoping for 60,000 for this year. We'll come up slightly less than that, but we continue to be a growing organization and something that I know we're all really proud of.
Yeah, thanks, Craig. I know that my team, community engagement, has been really out there trying to figure out new ways we can help out, try to really make sure we're driving that great message and the value of the credit union home. So thank you for that. All right, let's jump into the questions. All right, so the first question we got here was, are home equity lines of credit, or a HELOC, recommended for home renovations?
I think a HELOC or home equity line of credit is a fantastic product. It's actually one of the fastest growing products we've had over the last probably 3 years now. Part of that reason for that too is that when interest rates were really low, so many people refinanced or locked in very low mortgage rates. I think across the country, the average mortgage rate is 4% or sub 4%. So it didn't make a lot of sense for homeowners to refinance when they wanted to do home renovations. A perfect alternative for them to kind of do what they still needed to do for their home was through a HELOC. It
Mhm.
was the ability, or is the ability, to tap into the equity that you have built up in your home, and use that through a product like ours, which is variable. Most are variable rate, and they're tied to prime. The prime rate right now is about 7%. And the good news with HELOCs too is that you're hearing a lot about the Federal Reserve lowering interest rates. And every time they lower interest rates at this point, a home equity line of credit comes down as well. So every time the Fed drops rates, those products are becoming less expensive, which is another great reason to use that. At our credit union, we also offer a introductory rate. So our introductory rate right now for our HELOC product is just under 6%, and that's locks in for the first 12 months, and then it is tied to kind of prime thereafter. But a great product. It also has tax advantages, which can either even further kind of reduce the overall kind of rate that you're actually paying. So I highly encourage homeowners to consider it if it's something that you're looking to do for home renovations or other projects or other expenses that you may have.
Yeah, that's really great. I think one thing that when I was learning about HELOCs way back when I was a banker, I didn't realize that they could be used for kind of all sorts of different projects. Doesn't have to be related to home
Yeah,
renovations, right?
a lot of people tap into their home equity for college education. You know,
Hmm.
college is so expensive, and so when you've built up that equity in your home, you can use it for a whole host of reasons.
But home renovations being a great option for that.
Yeah, absolutely.
Awesome. Thank you for that. All right. Next question here is mortgage rates seem to be drifting lower, and I got my loan a couple of years ago when the interest rates were around 7%. Should I consider refinancing?
There's a lot of variables that come into play when someone wants to think about refinancing, and for this question, the member is right. A couple years ago, rates were higher than they are in the market. You know, we have seen rates over the last couple years at 7% and even north of 7%. Now rates are closer to the low sixes.
Mm,
So there are opportunities for people who have locked into those um, um, 7+ rates to really reduce their monthly mortgage payments. Some people look at it for doing that, a lower monthly payment. Some people look to do it to shorten the duration of their outstanding loan. You know, maybe
mm,
move from a 30-year time commitment, maybe down to a 20-year time commitment, but keep the payments relatively the same. What I would suggest is reach out to one of our mortgage loan originators.
mm,
They'll take you through the process of determining, does it make sense? They'll talk you through those different variables that you should be considering. You know, one of the variables too is, how long do I think I'm going to be in the home? Is it something
mm,
that you're going to be in your home for a number of years? Or is it something where you're like, you know what, I know that I'm going to be moving on in the next 2 or 3. And in that case, financially, it probably doesn't make sense to refinance because of the closing costs that you have to absorb. But they'll walk you through all those different scenarios to find out if it's right.
mm. That makes sense. Yeah, that's really great. All right. Next question we have is what do you feel the direction of certificate of deposit or CD rates will be and why?
CD rates are starting to drift lower, and they have been over the last year. A year or so ago at this time, you could find CDs in the marketplace that were right around 5%, so a really good yield. Today, if you find a rate north of 4%, that's really good. And
Mhm.
what you're seeing too is that most financial institutions are are gravitating those 4% APYs. And every now and then you can find something north of 4, although those are becoming harder to find in very shorter durations. durations that are 12 months and less.
Hmm.
And that's partly because of where uh, uh, bankers think rates are headed, and it's also has to do with kind of the shape of kind of the yield curve, which tends to still be a little bit more elevated on the short end. One
Hmm.
thing that I have been advocating to a lot of members, really over the last 6 to 12 months now, is that if liquidity isn't a concern for you, I really think trying to stretch out beyond a year makes a lot of sense, because I think the Fed will continue to have rates drift lower over the next 12 months. If you look at the what's called the Fed funds future market, directionally, the market thinks short-term rates will drift lower. And when the Fed starts to move those rates down, short-term CDs in particular will come down as well. So if liquidity isn't an issue, to move out into that for us, I would say, 15-month time period, and that's what I've been advocating a lot, again, to our members, is to do it. You might be giving up a couple basis points in yield, but I think in the end, you'll end up having it'll perform better because of when the Fed will reduce rates. And I think of how financial institutions in general will react. You're going to start to see those short-term CDs continue to drift lower, in my opinion.
Good to know. Yeah, it's really nice to have that perspective on what to look like ahead for rather than just like what's going on today, you know? So really appreciate your insight there. All right, next question. Are we saving money with real estate changes?
So I think when the member asked this particular question, I think it was in relation to a recent change we made within our branch network.
Yes.
So what we did recently is we had a branch located on Brookline Avenue in Boston, and we moved it to 1 Brigham Circle.
Hmm.
Was less than a mile away, right? And so our current location, we loved the Brookline Avenue location was fantastic. However, it's adjacent to the Jocelyn's Diabetes Center. That building is going to be demolished to make way for the new Dana-Farber Center. And
Mm.
so we were asked to leave so that project can continue forward. If not, we would have stayed there. We actually think that the medical community, and we've thought this for some time, really is large enough that we could occupy 2 branches down in that
Mm.
location. So we were always looking for a second location. We happened to find this location at 1 Brigham Circle, which we think is a phenomenal location. We are saving a little bit of money moving from one location to the next. The price per square foot is lower where we are
Mhm.
now, but the footprint that we are occupying is almost twice the size. So the new branch is, in terms of size, is almost twice as large as the one we were leaving. So yes, we're paying less per square foot, but for a bigger space.
Mm.
So the overall cost to us isn't significantly different, if that makes sense.
Yeah, it's really nice. I love the new branch. We did a lot of great events and stuff
Oh,
there.
it came out great, right? And we're getting
Hmm.
great member feedback on that location. The other thing that's great about it too is, it has parking,
Yeah.
which is so hard to find in any of our locations in any Boston location.
Yeah, that's so true. Yeah. All right. Speaking of that new branch at 1 Brigham Circle, will we consider altering the hours of our new branch at 1 Brigham Circle, offering later hours and or Saturdays?
We haven't talked about it yet internally, and so I love the question because it's going to prompt me to go back and ask our retail team, does this make sense for us to review hours? The branches that we've had up to this point have really been centered around where people work, not so much as where they live. The 1 Brigham Circle is a little bit of a difference for us, where we're a little bit more now too in the Mission Hill community. And so I think we may be able to view that in terms of its operating hours differently than how we view a location, let's say, here at Harvard Square, where, it's really catering to the people who are coming into the square or working at the university. So a big takeaway from me, and that's one of the benefits, quite frankly, I think, to our membership when we do these town halls. Um, a lot of the questions that come in, we act upon. And so we'll go back and we'll take a look at this and we'll see if it makes sense.
Yeah. Yeah, I love that too. I was always a big fan of just how we get this feedback and we talk about it and how that starts conversations internally as well. All right, next question. When are we joining the RTP and FedNow network?
Yeah. We've been getting this question the last couple town halls, so maybe even
Mhm.
be coming from the same member, I'm not sure. But this is definitely on our project roadmap for 2026. For those of you who are unfamiliar with what RTP and FedNow is, this is really a move by the Fed, and RTP is just kind of real-time payments. It's instant payments is what it is. Right now, when you make payments through the institution, sometimes there's a delay. The RTP and FedNow network and the FedNow part of the program is coming from the Federal Reserve itself. And their whole mission is to increase the speed. And this network allows money to move instantaneously 24/7. So you're not subject to, well, the credit union or your bank is only open from this time period to that time. And on the weekends, you know what, the Fed is closed, so money doesn't move. But these new systems allow instantaneous movement across open all the time.
Mm,
The Fed is really um, pushing institutions to actively participate in the FedNow program. Last I heard, I think they have close to 1,400 financial institutions across the country now that are engaged in some form or fashion in this part of the process. We know that it's important to our membership to do so, and so that is on our roadmap. And right now, it's targeted for call summer of 2026.
nice. Next question. Is the credit union using artificial intelligence? And if so, in what ways?
Yeah, so we are, and the original question also asked about what we're doing around an AI bubble, and so I want to kind of
Yes.
address that part as well. And so, just for our membership to know, we don't have an equity portfolio, or we don't invest in stocks. That's not part of our investment portfolio here within the institution. So there's no exposure, if you will, from the credit union's perspective in terms of, oh, did you invest in this kind of AI company and now its stock comes down because of a potential AI bubble that's within the marketplace. And that's been talked about a lot over the last year in particular.
Hmm.
So that's hopefully that's will address part of the question. We are using AI like most institutions at this point. We we partner with a lot of different vendors to bring um, banking services to our membership, and a lot of those vendors are utilizing different AI solutions to help us be a better credit union and deliver the services that our members expect. So we have it embedded in different fraud prevention tools, as an example. We have it embedded in some of our loan decisioning tools, as an example. Our chatbots have it on our sites. We have it within even making our employees more knowledgeable about our products and services. So we have a knowledge base that is run through an AI solution. And within our support center, our contact center, we have different solutions that have some type of AI feature or functionality to it. AI is something that we'll continue to explore and invest in. We are using it as a way to improve the member experience and really improve the effectiveness and efficiency of the organization.
Hmm. That's really great insight. I especially liked how you did talk about the sort of AI bubble as well and addressed just the whole question. That's great.
Sure, thanks.
Yeah, of course. All right. What additional loan offerings to Harvard grad students do you offer?
Yeah, I want our Harvard grad students to know that once they leave Harvard, they don't need to leave the credit union. We want to be that financial institution that you take with you, maybe when you leave Harvard. A lot of Harvard graduate students come to us originally when they're here on campus, and it might be through a student loan offering that we have. We do a large portion of graduate student lending with Harvard, and that might be their entree into the credit union. We do a fair amount of credit cards initially to Harvard grad students. And it's a great way for them to start to establish and build credit. And so, we would really advocate to the Harvard grad population to look at the credit union for a credit card for just that. Um, but you really today, we love when our members coming to our retail facilities or our branches. We love to see them. But by and far, members don't need to walk into our institution to conduct business. Most of it can be done digitally. So when a student, graduate student might leave to go to wherever their life takes them, they can take us with them. In terms of other offerings, as they kind of progress, whether they need assistance with an auto loan or a personal loan. We have some Harvard graduate students who have graduated from law school. We also offer postgraduate degrees, postgraduate loans rather, that can assist them. Maybe it's, their assistance or they need time studying for the bar exam. We can help from that standpoint. Maybe they're moving to their first apartment and they need renter's insurance. We can help for that. Maybe they want to start to, um, maybe they want to start investing. And so we have services that can help them with that as well. And maybe as life progresses, they want to start buying that first home. And we can probably assist them there. Right now, we can lend from a real estate standpoint anywhere within New England as well as Florida. I heard this scary statistic the other day, which is kind of terrible. It talks about affordability these days, but the average age now for a first-time home buyer is 40, which is just it's astronomical. It's kind of aging myself, but I was 26 when I bought my first home, so it just shows how that has changed over the years. But we're here to help. We want to be an organization that takes you through life's journey.
Yeah. Yeah, that's great. And I know that we always talk about the member for life impact and all of these different ways you could continue to, bank with us, even if you need to access your accounts in branch. We're part of the shared branching network with a
That's
bunch
right.
of other credit unions. So there's always great ways we can continue to help. You can always stay with us. Even a lot of people think, like you mentioned, that they might need to leave the credit union after they've graduated, but there's so many great ways we can continue to help. All right. Do you have any help for members who are impacted by the government shutdown?
Yeah, we do. We reached out to a number of members that we felt might be a government employee.
Mm,
And we may have missed members as well. But right now, if you are a government employee, you're furloughed, you've been impacted from this, and you may have a consumer loan with us, for example, we're using what we have this service called Skip a Pay, which allows members to just do that skip a payment within their consumer loan. Our program today allows members who, what we call in good standing, basically you've paid on time. You can skip up to two payments per year. That's our typical program. Right now, we're expanding that to be 3 consecutive months. We don't know how long the shutdown is going to go. I think we all had hoped it would be over by now, but who knows? But we're here to help. So if you are impacted, you have a consumer loan with us, we can suspend those payments for up to 3 months. And all we're doing is we're just pushing out the due date. We typically have a service fee that we assess. That fee would be waived. You do, or you would continue to accrue interest during that time period. But again, when you don't have to now make that car payment, or you don't have to make that personal loan payment, or that credit card payment, that's impactful right now. If you have a mortgage, I would ask you to reach out to our mortgage team, and we'll see what we can do in terms of helping you from that standpoint as well. We're here. We totally understand what's going on. We want to be good partners.
Yeah, absolutely. And I want to highlight actually another nonprofit that we work really closely with, Green Path. They are absolutely wonderful. This is a really, really close partner of ours. They offer like personal, all sorts of different counseling, housing counseling, budgeting counseling, student loan counseling, debt management, debt settlement things, all this sort of stuff. You don't actually even need to be a member to have these services for free with them. All you need to do is let them know that we referred you. Obviously, if you are a member, that's great. But if you reach out to them, either by calling them here or filing online, and you just let them know that Harvard Federal Credit Union referred you over to them, they'll be absolutely happy to help you. It's a free service. They're so wonderful. So if you are really extra impacted and you need a little extra assistance, or you need some counseling, some additional help, this is another great tool that we have for all of our members and even close non-members as well. All right, so next question is, with cuts to SNAP, Supplemental Nutrition Assistance Program, is the credit union helping in the community? And I know that we are actually a close partner of ours, Food for Free,
Right.
which is a volunteer program we do a lot with. We actually have gone ahead and doubled our donation that we're doing with them for 2026. So we're working closely with them. But is there anything more that you want to speak to about
Well,
this?
you just took my answer, Ty. No, and you're right. Food for Free is just a wonderful organization based over in
Mm,
Somerville. I'm so happy that we've had this ongoing partnership with them. They just do, like I said, phenomenal work, and people need them more than ever these days. And
mhm.
so, yes, we're doubling our financial commitment to Food for Free. We're happy to do it. It's the right thing to do. And again, we want to be good community partners through these challenging times.
Yeah, yeah. All right, next question. My 90-year-old father is a member, and I am too. I am concerned that he is being targeted for a scam. What can I do?
Um, I feel horribly if this is what's happening. And you know, elder financial abuse is significant in the country. I was looking at some stats quickly before the call, and there's an estimated almost $25 billion in financial elder abuse that occurs annually. And the sad part too is just a small segment of it goes reported, because a lot of times seniors, they get embarrassed that they might have made a mistake or something, or got scammed, and so they don't report it at all. And so it's a significant challenge. Reach out to the credit union, come into the branch, give us a call. We can talk about what you feel might be going on. We can help you in terms of putting alerts or lockdowns on your account. You can certainly, I will help you personally. I always give out my email on these type of webinars. So, and Jen or anyone who wants to put it into chat, that would be great. So it's just cleonard@harvardfcu.org. I would certainly make myself available to help you through this process too. You know, I hate hearing these type of stories, and unfortunately, it's just kind of a creepy world that we live in as well, and that happens way too often.
Mm, yeah, absolutely. And I know the credit union this past year also we brought on a new fraud and compliance manager as well.
Right.
So trying to find ways we can tackle fraud and help people is like really forefront on our mind right now.
Yeah, absolutely.
Okay. Would you like to speak a little bit about Harvard FCU's upcoming initiatives?
Yeah, I know we just have a couple more minutes. So again, thank you everyone for participating in these town halls. They're important to us as an organization to share information. And some of that information is just what we're going to be doing in the future. So as we look into next year, we started the path here in 2025 of introducing business services. We're still kind of in the infancy of that, and so we'll continue to be building out that program more and more around the business lending, but we'll also offer more cash management services like treasury services to our small business community. The other thing that's good, a project that's well underway at this point is that we will be offering a new um, online account opening tool. The one that we have now is kind of, there's too many points of friction. I had mentioned when we first started this conversation about our membership and more people finding value in our organization and wanting to be part of it. One of the challenges that we have is when people come into our organization to sign up, the way they sign up can be frustrating. It's a long, cumbersome process. This new solution will really make it, will remove much of that friction. And so we're excited to introduce that in the early parts of 2026. The other a couple projects that we're focusing on next year is we'll likely roll out what's called an intelligent IVR, a phone system. A lot of our members love to call in and ask for balances or do transfers through our support center. Still welcome those. This system would allow those same members to call in and do those transactions through this system, which is it'll use your natural language, so not a lot of kind of key punching, if you will. The beauty of it too is they can do it, our members can do it when they want to do it. They're not subject to our operating hours. They're not subject to, waiting on hold until a representative is ready. And so they can do it 24/7 and conduct a lot of their financial transaction through this kind of self-serve capability, which is exciting. Two more quick things just to kind of make you aware of our MGH location. So over the Mass General Hospital branch, we're looking to kind of do some renovations to that location. It needs a little TLC. And so we're planning on doing some of that next year as well. And then one of the things we've talked about on these calls in the past is, are you going to open up any new branches? And so next year we'll be doing more work in terms of branch exploration. Where do we think the next branch should go? I think since we changed our charter to be a little bit more broad, that also opened up the opportunities for us to expand our branch network beyond what we were doing previously. So I think that's something else that's very exciting.
Yeah, that's great. And then we are also inviting donations. We're currently accepting donations for Domestic Violence Awareness Month and upcoming Toys for Tots. You can find donation boxes in all of our branches. This is a really great way to give back towards the end of the year, towards the holiday season. And definitely something we're always trying to, especially like, gathering food and stuff like that, always trying to find ways we can give back to our community, work together. So thank you for that. And then we have a couple upcoming webinars as well, including November 12th, very soon. We're doing a military financial wellness webinar. We also have coming up aligning spending with your values. That's a new one we've been offering this year. It's been a really great hit. So that's coming up in about a week on November 13th. And then we always are big into budgeting for the new year, as well as budgeting for the holidays, things like that. So we have one coming up on that for early December as well. And all of those you can sign up for at harvardfcu.org/workshops. So those are some other upcoming webinars we have. And then I think that's it. Let's take a look and see if we got any questions we want to answer live during the webinar today. But otherwise, I believe that we are good to go. So thank you so much, Craig. I really appreciate, as always, you taking the time out of your busy schedule to talk directly to the community. And just so everyone knows, we are always looking for feedback. We always want to keep in touch. You can always reach out to us, whether that's at support@harvardfcu.org or you call in or anything like that. We always want to make sure we have our ears open to our community and to our members. So thank you all so much for being here today, taking the time out for it, and for asking these great questions and staying up to date with us. So we'll be here for just another minute or so, but thank you again. And Craig, thank you for your time.
Thanks, everyone. And Ty, thank you.
No problem. All right.